Since October 7th, a tense and escalating situation has been unfolding between Israel and Hezbollah, running parallel to the ongoing conflict in Gaza. Initially, both sides limited their exchanges to missile strikes, resulting in a relatively low number of casualties compared to the devastating toll in Gaza. However, a recent tragic incident has escalated tensions further. On Saturday, a Hezbollah missile reportedly killed 12 young people on a football pitch in the Golan Heights, provoking a strong reaction from Israel. In this video, we'll dive into the recent developments, analyze why a full-scale war might still be unlikely in the near future, and discuss the broader implications of this escalation, including its potential impact on the already fragile global economy. Before we begin, if you haven't already, please consider subscribing and ringing the bell to stay informed when we release new content. Hezbollah emerged in the early 1980s in southern Lebanon, supported by Iran, and quickly positioned itself as the main opposition to Israel's invasion and occupation. After successfully resisting Israeli forces, Hezbollah cemented its reputation as a formidable anti-Israel movement, especially following the 2006 conflict where it held its ground against Israel. Over the years, Hezbollah's arsenal has grown significantly, with an estimated 150,000 rockets, making it one of the world's most heavily armed non-state actors. This success story has inspired Iran to continue supporting other proxy groups like Hamas and the Houthis. Hezbollah's influence extends beyond its military capabilities. It now operates as a powerful political entity within Lebanon, effectively controlling much of the country's Shiite majority areas. In the aftermath of Hamas's attack on Israel on October 7th, Hezbollah launched rockets into Israel in a show of solidarity, despite claiming no foreknowledge of Hamas's plans. Since then, there have been near-daily exchanges of rocket and missile fire across the Israeli-Lebanese border, resulting in significant casualties and displacement on both sides. The tragic incident in Maid al-Shams, where 12 children were killed, marks the deadliest loss of life in the region since October. The town, located in the Golan Heights, a region internationally recognized as part of Syria but occupied by Israel since 1967, is predominantly inhabited by the Druze, an Arabic-speaking ethno-religious minority. This attack has sparked a predictably strong response from Israel, including missile strikes into Lebanon and warnings of a potential all-out war. Despite the heightened rhetoric, a full-scale conflict still seems unlikely at this point. There has been no significant military buildup on the Israeli side, suggesting that a ground invasion is not imminent. However, the pattern of escalation remains a serious concern, and without steps towards de-escalation, there is a risk of further violence. The ongoing conflict has significant implications for the global economy, particularly affecting trade routes through the Red Sea and the Suez Canal. Attacks on merchant vessels by groups like the Houthis have already led to increased shipping costs and disruptions. An extended conflict could further destabilize the region, potentially involving other actors like Iran, which could escalate into a broader regional war. Expected to see as many as 60,000 businesses shut down in 2024, according to business information company Coface BDI. A total of 46,000 businesses had to already close as they struggled to stay afloat, with many hurt by a high interest rate environment, more expensive financing costs, a shortage of manpower, a sharp decline in turnover in operations, logistic and supply disruptions, and insufficient government assistance. In the fourth quarter of 2023, economic output plunged 21.7%. In April, S&P Global downgraded Israel's credit rating, a measurement of the government's ability to repay its debts, and warned about further downgrades in the future. Moody's Investors Service, another rating agency, also downgraded Israel, warning that the war will become a significant economic and political burden for the country over the long haul. Since its founding in 1948, Israel has fought numerous wars, but this one is its costliest. As of January, the Israeli military was spending $272 million per day on the war, according to the Israeli news site Ynet. By that time, The total cost had reached an estimated $60 billion, factoring in military expenses, damage to civilian infrastructure, and compensation to Israeli businesses. This figure has likely increased significantly since then. On the Palestinian side, the situation is equally dire. The relentless Israeli offensive in the Gaza Strip has set back Palestine's overall socioeconomic development by more than 20 years, according to a new UN report released on Thursday. The joint study by the UN Development Programme and the Economic and Social Commission for Western Asia revealed that the poverty rate has surged to 58.4%, pushing nearly 1.74 million additional people into poverty. At the same time, the gross domestic product, GDP, plummeted by 26.9%, resulting in a loss of $7.1 billion compared to a 2023 baseline before the war. The war has not only affected Israel and Palestine, it has also affected a lot of companies like Starbucks, McDonald's, and KFC, to name a few. Starbucks lowered its expectations for full-year sales and profits after a disastrous fiscal first quarter that saw a marked drop-off in customer traffic. Same-store sales at cafes that have been open for at least 1 year, dropped 4% in the second financial quarter. In March, Kuwait-based Al-Shaya Group, the company that owns the Starbucks Middle East franchise, revealed it had to cut 2,000 jobs due to the boycotts, amounting to around 4% of its workforce. The McDonald's fast food chain has experienced its first decline in global sales in almost 4 years, significantly affected by a boycott campaign initiated by Palestinian supporters around the globe amid the ongoing Israel's war on Gaza. McDonald's worldwide sales dropped by 1% in the April-June period, marking the first decline since the fourth quarter of 2020 due to the impact of the COVID-19 pandemic and government-imposed restrictions, the company reported on Monday. The report showed that the net income of McDonald's decreased 12% to a little over $2 billion in the second quarter of the year. Meanwhile, fast food giant KFC temporarily closed over 100 of its stores in Malaysia on April 29th, after losing significant business due to boycotts linked to the Gaza war, according to multiple reports. The situation between Israel and Hezbollah is complex and fraught with potential for further escalation. As tensions continue to rise, the impact on the region and the global economy could be profound. We invite you to share your thoughts. Will Israel escalate the conflict with Hezbollah? Do you think Israel's economy will recover from this mess? Are they going to have another credit downgrade? How will this affect the region and the global economy? Please like, subscribe, and share this video if you found it insightful. As always, stay tuned to Earth Economy, explained for the latest updates on these critical issues. Thank you for watching, and stay safe.